Good afternoon, everybody. I hope that you're having a great day. This is your market update for April 27th. I'll get right into it because we got a lot of information to cover and I want to try to keep this under 3 minutes. Stock market opened the day higher across the board, Dow leading the way up 120 points on the back of some strong corporate earnings reports, especially in the tech sector. Stock market has continued to rally. Dow is currently up 392 points, NASDAQ up 253, S&P 500 up 61, so a good day in the stock market. Unfortunately, not so much in the mortgage-backed security market. After having a less than stellar day yesterday, closing down 20 basis points, when they opened this morning, mortgage-backed securities were down another 19 basis points, currently down only 14 basis points, so off their worst levels of the day. But still down on the day. They're finding support at that 50-day moving average, unfortunately finding resistance at the 100-day moving average, so trading in a very tight range. We'll see how the PCE report, the personal consumer expenditures report that comes out tomorrow, impacts the market, specifically interest rates. If the inflation numbers come out lower than anticipated, I think that mortgage-backed securities will rally, and we could have some further improvement in mortgage rates. Speaking of mortgage rates, the Freddie Mac published 30 and 15-year rates came out today. For the 30-year fixed rate showed the second consecutive week of increases, although very, very slight. The 30-year increased by 0.04%, currently sitting at 6.43%. The 15-year actually dropped by 0.05%, currently sitting at 5.71%. A few economic reports came out today I wanted to touch on very quickly. The GDP report, gross domestic product for the first quarter of this year, actually showed an increase of 1.1% growth, whereas the market was anticipating 2%. So it actually shows the economy is slowing from a growth perspective, which the market is taking as potential, ammunition or information for the Federal Reserve to be less aggressive with rate hikes moving forward. Initial jobless claims this morning that came out, which are people filing unemployment claims for the first time as of last week, were actually lower than the week prior by about 16,000 claims, coming in at 230,000 claims. Also, continuing claims were also lower than what the market had anticipated. So with that said, we've seen a lot of corporate earnings reports and announcements that have come out recently about companies potentially laying off people, so those numbers could rise in the coming weeks. Pending home sales for March actually fell 5.2%, which was below market expectations of an increase of 0.5%. So we see the impact that higher interest rates as well as limited housing supply nationwide is having on pending home sales. Pending home sales are basically new contracts on existing homes. New construction numbers are up, so new construction appears to be filling that void, but until interest rates get better, I think that a lot of people are going to sit on their current mortgages or current homes at 2s and 3s and not really want to sell their existing homes, and that's going to basically continue to kind of lend to supply issues that we're having. So a PCE report comes out tomorrow. Again, key measure of inflation. The Federal Reserve is looking at very strongly moving forward. We'll let you know how that impacts the market. I hope you have a great afternoon, and I'll see you in the morning.